Hey, we are live again. We're having some technical difficulties. I don't know what happened with my phone. I keep on turning upside down. If you can see us, please let us know. We just want to finish up this very important topic we are discussing here about home buying process. So are we good, Gitao? Can you see us? Are we good? Are we upside down? Are we good? Let us know. Because I don't know what's going on. Before we get started here, come back. Thank you for joining Candice, Kiki, Kate Saimo. Yeah, we good, right? Let's finish this. I think we kind of lost some of the people, but they can watch maybe tomorrow because it's gonna be on our Facebook, on our Mercy's Facebook page. Where were we, Mercy? If you can go back where we were, I think you have given up the process of buying the home. You have talked about the realtor, you have talked about the lender, pre-approval, you have talked about the house hunting, and I was asking you, and I keep on, whether you can have two realtors at the same time, and you say you can only have like one realtor at the same time, and you say you have to sign the client realtor the agreement. That's
Yes.
where you are before, right?
Yes.
Okay.
So what I was saying is, at times, before you decide on which realtor that you want to work with, of course you can talk to a few. You can interview a few.
Yes.
And see who you want to work with. But the moment that you sign the agreement, is the agent-client agreement, then that is the realtor that you should be working with.
And how long does the agreement stay for? Is it 1 year, 6 months, or it doesn't matter?
It could be anywhere between 6 months to 1 year. It really doesn't matter.
Oh, okay. But you cannot just hop around between the realtors.
Yes,
you have
cannot.
to stick with one realtor.
No.
And I think that's very important to know if you're looking a house up there. You know, you don't just go to one realtor and then go to another different realtor. You know, I think you have to be transparent.
If you've signed an agreement with them, that it's more like you're hiring them. Even though you're really not paying them directly, they're going to be paid by the seller. That is a legal document that you sign that you have chosen the realtor that you're going to be working with. So that's why it's very good for you to talk to probably a couple of realtors, interview them so that you know who you really feel connected to and who's going to look out for you.
Okay, let's talk about the loan officer. Do you look the loan officer before we look the realtor? Which one comes first? Can I go to the bank and ask for the loan, or do I go to the realtor first and then go to the bank? Or how does that work? Or it don't matter like which process you start?
Normally what I say is financing comes first.
Okay.
However, you cannot just say, hey, let me walk into this bank out here and find and get a loan. Yeah. Especially if you're not so sure of your circumstances.
Yes.
And I mean financial circumstances.
Yeah.
Then approach a realtor.
A realtor first.
And then a realtor will actually direct you to somebody who they work with, who they know that is a good loan officer, has a bunch of programs that they can actually select from.
Oh, okay.
See what I mean?
Yeah.
Because if you go to, let's say, any of these big banks, they normally have very strict guidelines, and those guidelines they're set in stone. Let me say that. But most of the other smaller banks, or you can talk to maybe like another loan officer who deals with a bunch of programs. Yes. Then, if you do not qualify for this program, they might be able to put you on a different kind of a program. Does that make sense?
Yeah, it does. Yeah.
Yeah. So for us as realtors, myself, like I have different loan officers that I work with. That depending, if you come to me and tell me, hey, I've only been at this job for a year and a half, then I know which loan officer to send you to, because I know they have programs for you.
Oh,
Makes
okay.
sense?
That's good.
Because we've already done the homework.
Yes.
And we do know the loan officers that we work with.
Oh, okay.
And we know, the kind of programs that they have. If you come to me telling me, hey, my credit is only 590. However, I have
you can
this,
refer
this
them
and
to a
this,
specific.
Then I refer them to a specific one who has who can
deal with that
handle
kind of
your
space.
exactly.
Okay. Oh, okay. And are you allowed to mention some of the companies you work with? Because I know some of the businesses there, you cannot mention some of the companies you work with because of either confidential or maybe you're trying to promote some of the company. If you're like like the free agent, can you mention, if you can, some of the companies we can go there, or maybe somebody who is looking for a house, they can go and look for those companies, or the mortgage companies.
Mortgage company
the
for
mortgage,
financing?
yes, for financing.
That one, unfortunately, it's one of my things that I keep to myself.
Okay,
If
yeah.
you talk to me directly and you want to work with me, then
You can refer.
I will refer you.
Oh, okay.
Yes.
That's pretty good. And without going to details, can you tell us some of the programs out there for financing? I know they have like different financing, and I know you're a realtor. You're not a loan officer. Like, just to mention some of the basic, the programs out there for the financing.
Okay. Let me mention that before I became a realtor some years back, I was a loan officer myself.
Oh, okay.
So I know quite a bit when it comes to loans and financing.
Okay.
And using my knowledge when I have a client, then I would be able to really advise them on some of those things. I will give that as a benefit to my clients. However, let me say this, I'm not a licensed loan officer in the state of Texas. But I usually just, talk to my clients, and I might be able to offer little things here and there for them to, to work with. But some of the programs that are well known out there is something like FHA program.
Okay.
FHA program is backed by the government.
Okay.
And it is so it is government insured, and that's why they are able to really go with very low credit score, and they can start anywhere from 560s, 580s. It just depends with how much down there they're going to ask you for. And at times they can, they are known for very low interest rate as well.
Okay.
Low down payment, because the down payment can be as low as 3.5%.
Oh, wow.
Yes, just 3.5%. So, and even on top of that, you may even be able to qualify for some down payment assistance program.
Oh, okay.
So that's what I tell my clients, that at times, depending on what you qualify for, and if you qualify for the down payment assistance program, you might even not even bring any money to the closing. Because let's say for myself, I do have finance companies or loan officers and mortgage companies out there who I know can give you up to $5,000 on closing cost.
Okay.
And I say up to $5,000 because it just depends with your situation and the program that you qualify for. And of course, if you go through me. And they are not the only ones. There's so many other banks out there that do normally have some incentives to offer you if you go through them. So, one of those programs like you ask is FHA.
Okay.
We do have VA as well.
Okay.
VA is for the veterans.
Okay.
Anybody who has served out there, whether you're in or you're retired or you're a veteran, then you can qualify for that. And they normally do up to 100%.
Okay.
Okay, so you actually can just go into a house, look for a house, sign all the documents, and maybe you've paid maybe like $500 or even $1,000. Do not quote me on that. Talk to your realtor. Talk to your loan officer so that at least they can be able to pre-qualify you.
Okay.
But that is possible at 100% for VA. There are other programs out there that we call conventional. It can be either conforming mortgages.
Okay.
So those ones, some banks do as low as 5% and some as low as 3% down payment.
Oh, wow.
Yeah. Yeah. So of course, depending on, other aspects of your financials as well. So with your credit score, and income, debt to income ratio.
Oh, okay. So FHA,
those are the most common. Yes.
Most common. Low scores, you don't have to have like 640 and above. And they give you like low down payment, and but it's a little bit stringent. Like it's a government-backed loan.
Yes, it's a government-backed loan.
Yeah.
So of course they're going to be a little bit more strict as well.
Yes.
So they normally have even limits on the house that you can buy. You cannot go for an $800,000
Yeah, I think they have a cap.
And expect an FHA loan. So if you wanted to buy like an $800,000, then you're gonna go for like a jumbo conventional loan. So there's different ones, but the most common ones are the FHA, VA, that people can qualify for at 100%. There's even USDA out there. USDA are mostly in the rural areas. Yeah. And they as well can go 100% financing. And of course now the conventional.
Are you guys working with the new homes,
new build?
The new built homes, because we've seen a lot of here in DFW area. Like we have a lot of builders here that have come, So are you dealing with a lot of people who are looking for the new home? Like,
yes, we do. We do, and we do represent those as well. And anytime you go to the new builds, you're gonna find models, and they have their own people there that can explain to you. But one of the things that that I wouldn't like you to forget is, those people are working for the builder. They're not working for you. They're there looking out for the builder's best interest. So even when going for the new build, get a realtor. Select a realtor and let them represent you. Because remember, if you're buying, you're not paying this realtor directly. The seller or that builder is going to pay for a fee.
I think that's good to know, because I was buying my home. I didn't know you can go with a realtor, because we built from scratch, but they told us, oh, you don't need a realtor, so everything it comes together as a package. But it's good you mentioned, even if you go to look for the new builders, it's always good to have the realtor, so who is going to be your advocate and for your own best interest.
And let me add one more thing. They will tell you that because, of course, they are trying to hold that commission, and they're going to give you all these incentives. But guess what? Even when you bring your own realtor, they're actually going to negotiate even better terms for you.
Okay.
This is the reason to why. Because we as realtors, we do know these builders. We work, let's say like my office has over 600 realtors, correct? Okay. Most of those have taken clients there. So we do know the limits of how much incentives that they can give.
Oh, wow.
So whenever we know which builder that you've selected and we've taken you to those places, we'll talk to other realtors and find out, hey, what are the kind of incentives that they're giving? Right? So when we come to the negotiating for you, then we are actually going to be able to negotiate the best. We are going to get each and every cent that we can be able to get for you. Because when you go by yourself, they're going to give you whatever they can give you. They can tell you, we're going to do upgrades up to 20 or up to 20,000 or up to 10,000. But that does not mean that's the limit.
And it's good you're talking about this stuff, because I didn't know when I went to buy, they say you don't need a realtor, so we got you. So everything is coming as a package. So, and now you're telling me that it's really good before you even go to these new builders, go take your realtor
go
there with you.
Your own realtor yourself.
Any advice you can give, like the self-employment people, like the truck drivers, who really doesn't, how do they go about it when they go to the qualifying for a home? Do you have any advice for the self-employment, or do you deal with people who are self-employed in your case, or you don't have?
When you say that, I'm just smiling here because I have a lot of truckers who are my friends.
Yes,
because I've been in that field as well.
Oh, okay.
I have, me and my husband have run trucks. We do have our own trucks. We've done dispatch, and so we have a lot of friends who are in that area. And they have money. And not only truckers, most self-employed people, they have a lot of money. But when it comes to the end of the year and they're doing their taxes, they don't want to pay taxes.
That's a kicker, I know, right?
They don't want to pay taxes. And I'm not saying it's everybody out there who's in business who don't want to pay taxes, but most of the time, most of the people, they are going to write off so much at the end of the year that when you look at their 1040, it's like they made nothing. But guess what? It's good for you at that time. But when it comes to actually buying a home,
you can't qualify.
The bank is like, no, you don't have money. You don't have money. So it's always good for you to actually file the taxes right.
Do it right.
Do it right. Don't put so many things there, just put what is enough.
Like the mileage and all that kind of stuff.
Put your mileage, put the stuff that you need to put. And pay some taxes.
Wow.
And at least try, do that for at least 2 years so that at least you can be able to qualify. But if you put too much on there, oh my gosh, these people have a lot of money, but when it comes to the end of the year, they file their taxes. And that's one of the problems. It's very hard right now for any bank out there to approve you for a mortgage just looking at your credit, unfortunately.
Yeah.
And some time back, when I was a loan officer over 10 years ago, we had the stated incomes. I mean, you could just come with a 700 score and tell us you're making 100,000 and we give you a loan.
Oh my goodness.
But guess what? That's why the market crashed.
It does. Yeah.
Because, there are so many banks out there with so many guidelines. And they were very easy. I mean, anybody could have just gotten a mortgage. And that's why we went to where, that's where the market crashed.
Yeah.
The real estate crashed.
Wow. Can you also talk about, because I know people, they go to the loan officer, you get qualified, is a pre-qualification this time. They tell you start going the house hunting, but when they go to the underwriting, you get disqualified. Can you tell us some of the things people get disqualified? Even if you have gone to the loan officer, they have said you can qualify for this amount. You have started like the house, shopping around. Tell us some of the things people that get disqualified for the home loans.
Okay. One of the things that many clients do is they apply for a mortgage for financing verbally. They give all the information verbally. And yes, the loan officer is going to give you a pre-approval letter.
Yes.
Based on your verbal information.
Exactly.
So when you come to me telling me, hey, I'm approved for 250, I'll ask you, hey, send me the letter for the pre-approval.
Yeah.
You send me the letter. If I see there it's written verbal, I'll let you know, hey, get back with your loan officer, submit all the documents first.
Yeah.
Because, and this is the reason to why, most of the time, you give that information, that does not mean you're lying, but then they might look at your taxes differently than the way you're looking at it.
Yeah.
So it's very important for you to submit those documents ahead of time, even before you start looking. Because guess what happens? You tell me that we start looking for a house and maybe you have kids and
inspection
emotionally you start getting prepared for a house.
Yes.
I show you beautiful houses. Your kids are running up and down through the stairs. They're selecting their own rooms. They're getting excited. And then all of a sudden the financing gets started and maybe
underwriters, oh my God, they're tough. Yeah.
Messes it up. How are you going to explain to those kids that, hey, kids,
we didn't
we're not going to get the house this year because what?
Yeah.
So I always say at least submit some of those things up front, right? That way they can check whatever they need to check for you. That way, in case you don't qualify, it's going to be maybe something else, but not anything to do with your income or credit.
Wow.
But some of the things that happens, because a disqualification can come even the last minute. Some people get pre-approved, they start looking for a house, they find a house, and then all of a sudden when the financing is going through, they think they've submitted everything. And then they think, you know what, let me take 2 months off and maybe go to my country, visit for like a month, and then come look for a job.
Yeah.
Nah. You cannot do that. If you're employed somewhere, you cannot quit. Or you cannot
consistency, yeah.
Or you cannot go to another job without letting your loan officer or your realtor know. If you get promoted within the same line of work, then that will be okay. But it's good to mention that.
Yes.
That, hey, I'm being promoted from this to this. It's in the same line of work. That's okay because it's more money.
Yes.
But then when something happens, that it's either a demotion, right? You're making less money, or you quit this job, you get better money somewhere else, but it's not the same line of work. Some banks are picky because they don't know how long you're going to be in that position. So they like that stability, right? And they want to see your credit remains the same. Wow. This is what some of the people, some people, think that, hey, I qualified for a house. My credit is good, so now I need new couches or a big screen TV for that media room that they just found in that house. You cannot go pulling any more credit.
Yeah.
You cannot just go to Best Buy and apply for anything.
Not even spending.
During that time, until you actually go to the closing table and sign the paperwork, don't try to buy anything. not even a car, not even opening a Best Buy credit card. Try to just not do anything on your credit. Anything that affects your credit, it's a no-no.
Because you have to go back to the underwriting, and they have to go check, and they have to do the figures again, the debt income ratio and all that big mess. So
yes.
it's good if you don't touch anything.
Don't touch anything. Don't touch anything. Don't apply for credit cards. Do not pay for extra collections unless your loan officer asks you to pay something on there. Leave everything just the way they are. Of course, continue making your payments.
Yes.
Your credit card payments, your rent payments, and stuff like that. Those ones are important.
Yeah.
This is the other thing that I've come across. Some people think that now that they've qualified for a house and they are maybe in the middle of their lease, they think that they don't have to pay it or they don't have to give notice because they're moving.
Ooh.
Don't do that. That's one of the blunders that you can ever do, because guess what? The underwriters, they will call your apartment or whatever that you're paying your other rent to and verify.
Yeah.
Even the last day before the closing,
I'm telling
they
you.
will call and verbally verify that you're still working at the place that you filled in the application that you're working at. So that's why it's very important. If anything changes in your lifestyle, when it comes to financials, your employment or anything, let your loan officer know. And if you're questioning what you want to do, talk to your realtor, because remember, your realtor is the only person who's looking out for your best interest.
Yes.
The loan officer is looking out for the bank. So talk to your realtor so that they can advise you whether this is something that you should do or not.
Oh, that's pretty helpful. And it's good you mentioned that because people, they say, oh, I'm in the apartment, I'm not even going to pay it. I'm just going to move out. I'm not going to give notice, and you don't want to be, have a rude shock on the closing day or a few days before you close.
Yes,
and you have never dealt with the underwriter. They are crazy. They're going to ask you almost anything. They're going to bug you on the phone like almost every day.
Yes.
And you're going to be on that emails trying to scan documents and send to them. So
I always say, if you are the kind of person that you work at a certain place, let's say, for example, a nurse.
Yeah.
You work in a nursing station, you're there for 12 hours. Have most of those things on your phone.
Yes.
That way, in case they request for something
just
and
send
you're
it.
working,
yes.
When you take a break, submit it. Don't wait until tomorrow, because the moment underwriters are working to clear your conditions, they want everything cleared. They request for something, send it.
They want it.
They want
right
it.
away.
Like,
yeah.
So the faster that you work with your financing company or your bank, the faster that you're going to close.
Oh, that's good. Yeah. And let's talk about the house hunting. Do you take your clients to house hunting, or do they go look for houses? They say, hey, Marcy, I got a house here in McKinney or in Forney. Can you come and see it? How do you go about the house hunting? Do you go together? Do they go by themselves?
No.
Do they go like on the neighborhoods without you knowing, and they let you, oh, I saw a big house over there. How do you, because I did it sometimes. I was sneaking through the neighborhoods to see some houses, and I was like, but how do you go about that? If you can tell the viewers, please.
I've done that before too. At times I would just be driving somewhere, see a beautiful house. Not like I want to buy it, but at times I would just stop and wonder, I wonder how much that house is. So normally I get into my app and just, Google the house if it's listed. But anyways, you're asking about how we go about the houses.
Yes.
So, if a client comes to me and of course tells me, hey, Marcy, I'm looking for a house and I have 3 months before I can move. Okay, of course we are going to go through the financing process with a loan officer. And then you're going to tell me exactly, I'm going to sit down with you. You tell me exactly what you want in a house.
Yes.
What are you looking for? What locations? And then I'm going to start sending you listings. These listings come from MLS, something that we call multiple.
MLS.
Yes, MLS. Okay. It's a multiple listing service.
Okay.
It's a centralized service to where all the realtors, whether they are Keller Williams or Century 21 or whatever brokerage that it is, they list their houses there. Okay. I would say there's, almost every realtor puts their houses there. Of course, unless the homeowner says, no, don't put it on MLS. But I don't see the reason to why they wouldn't like it listed on multiple listing. And, all the realtors say, put their listings there. So that for me as a realtor, if I go in certain location and I'm starting to look for the kind of house that you've advised me that you need, I'm going to pull all the houses email them over to you.
Okay.
All right? And then you're going to look at all the pictures. You're going to look at what's most important to you. Then you're going to let me know which houses that you really like, right? Then those houses that you like, I'll take those. I'll review them. Using the same questionnaire that you told me about, that I'm going to really see, are those houses available? Are they still active in the market? If they are actively listed, then we are going to make an appointment to go see those houses.
Okay.
Now, as a licensed realtor myself, and all the other licensed realtors out there, as long as they are active, we normally do have access to all those houses.
Okay.
So when we make an appointment, of course, to make sure that the homeowner is not going to be there, if there is any dogs, they are locked up, we are going to make an appointment certain days, and then we can both go. And I'll show you the house.
Okay.
So, and normally I like to show a few houses on a certain day, not just one house. We look at a few houses. If you like any of them, we go ahead and
make an offer.
Make an offer. Of course, do comparative market analysis.
Okay.
So that at least we can come to a decision on how much of the offer that we should make.
Okay, and what about the websites that we see here, like Zillow? Are those legit?
Realtor.com, Zillow. They are legit, yes.
Okay.
They are good websites to look at. However, at times they're not normally updated. You might see a house there that is listed, because at times I get clients who will call me and tell me, hey, I've seen this house on this website. And then when I look on my multiple listing service, it's not even active.
Okay.
Somebody else already put an offer on it. So our listings are usually the most accurate.
The MLS, you said. Okay.
It's the most accurate. And that one, you can only get access to it when a realtor sends you the listings.
Okay.
Yes.
That's good.
The other way that you can actually get access to it, like let's say for me, like I have an app that I normally send to people and my clients. That way, at least they can be able to search the MLS themselves directly, without me interfering with it.
All right.
Yeah, but of course that's more work. So why not let me do the work?
Okay. So let your realtor do the work. And if you find a house, what next? Make an offer.
If you find a house that you like, then of course we go ahead and make an offer.
Okay.
And if the offer is accepted, then of course we go the rest of the process to where we do the inspections. If everything goes well, then we go ahead and continue with the financing process. Of course, the bank is going to do an appraisal.
Okay.
Because they're not going to lend you, let's say, $300,000, and they don't know whether the house is even worth that much.
Okay.
So they do an appraisal, and they send their own appraiser to go ahead and do that. And that process, from the offer to the closing, it can take anywhere between 15 days to about 45 days. And
do your clients need to do the appraisal themselves, or just the bank do the appraisal?
The bank will order the appraisal.
Oh, okay. So, who pays for that?
The buyer will pay for it.
Okay.
Some banks will pay for that as well.
Okay.
And some of that, they will pay it upfront, and then the buyer is going to pay at the closing.
But the inspection, you also pay, the buyer pay for the inspection?
Upfront.
Oh, okay.
That is the one cost that I normally say it's, like I said, it's the best investment that you can do. It might be $300 to $500, but it's a good investment. Do not ever buy a house without an inspection.
Never do that. It might have a crack. It might not have, you don't know what's going with a house.
Yeah.
So that's can be very dangerous.
Yeah.
Can you? And there's also money you put there, at the buyer.
The earnest money deposit. The earnest money deposit is an amount of money, and we do not really necessarily specify how much it has to be.
Okay.
But we normally say standard is about 1% to 2%.
Okay.
Of the loan amount. You give that together with the offer.
Okay.
To show that you're really serious. With this particular house. And that's when now the seller, when they accept your offer, they will take it down from the market to show that, hey, it's taken.
Okay.
Now, if they're taking the risk of taking that house down, then they want to see that you're actually serious.
And they take your check.
They take a check.
The seller take your check.
Yes.
Okay.
The seller will take a check, and actually the check goes to the escrow company that you're going to be closing at.
Oh, okay.
They take that check, they hold on to it. But then it is going to be a part of either your down payment, or you can get it back at the closing, depending on how it goes. Of course, there's conditions on the contract that we normally put that you can get your check back. but you can as well lose it. So again, it's good to get a good realtor who is going to help you fight that if you decide to change your mind.
Okay, and if you pay the earnest money and the financing didn't go through, do you get that money or you lose it?
If the financing did not go through, you should get that money back.
You should get the money back, and of course it's on the agreement you sign.
Yes.
Okay.
It's on the agreement.
That's good.
Yes.
Yeah. Let's talk about the closing. What happens on the closing day? You've looked the house, you put the earnest money. Are you waiting for the big day to go get the keys? The closing day, yeah.
The closing day, that is the happiest day,
yeah.
Right?
And it's nervous, of course, too.
You shouldn't really be so nervous. This is the reason why. If you have a good loan officer and a good realtor, the day before the closing, you should really know that everything is good.
Oh, okay.
Yes.
Right.
By the day before, you should know that everything is good, that when you go to the closing table, all you gotta do is just sign the paperwork. I normally say it's the many paperwork day because you get like a bunch of, papers for you to sign.
It's a lot of papers,
it's a lot of papers. One of the things that you sign there is, of course, a mortgage note. A mortgage note is the document that you sign to state that you're going to pay the mortgage back, right?
Oh, okay.
Among many other papers. And most of those things, realtor will walk you through even before you get to the closing table.
And where do you normally go? Where do you do the closing?
Title company.
Okay.
We normally title companies all over. There are so many.
Okay.
They are independently owned. You get it's a third-party company that will do your title search for you. They will do title insurance as well to make sure that when you buy that house, whether it's a house or a piece of land or commercial property, that there's no other attachments to the house. And making sure even all the previous mortgages for the other seller have been paid. So, and that's why it's important to as well buy a title insurance.
Oh, wow.
That is not something that you pay upfront though. You pay it at the closing.
Okay, and I keep on hearing you guys, the realtors, say it's a buyer's market, it's a seller's market. Can you tell the viewers what is that? What does it even mean? The seller's market, buyer's market.
Yeah, the sellers, we always say there is a seller's market and a buyer's market. It all goes with demand and supply.
Okay, demand and supply. Yeah.
Yeah. The buyer's market is the situation in which supply exceeds the demand.
Okay.
So, and that's when you normally hear the purchasers has an advantage over the sellers in price negotiation.
Okay.
So there could be so many, buyers out there, but not as much. So one house could just have like multiple offers. And that's when now that is a seller's market because you as a buyer, you're trying to compete over that house.
Yeah.
I mean, think about it. If you've been looking at houses, you've gone several times and this is the house that you really love. And then you hear there's 3 other offers. What are you going to do? You're going to give your highest
offer you can. Yeah.
So, and of course, the buyer's market is the opposite.
Okay.
Right?
So many houses, nobody's really buying. Yeah.
Nobody is buying.
Yeah.
And that's when you see the houses out there, they are listed and they've been listed for so long until the sellers are getting frustrated. So whoever comes, gives an offer, they'll try to work with you.
Oh, wow. That's good. And when you close a house, anything you want to tell the viewers, if you get a key, anything you can advise, or that's you can do pretty much that you want to do, like after you got the keys and.
Really, there's nothing. I mean, the closing day.
You can go on the shopping spree. You can go and buy whatever you want to buy. Yeah.
Basically, after you sign the paperwork.
You're free to do anything.
Yes, and that, the paperwork have been signed, everything is done, you get the keys. It's your house. It's your happy day. You can move in any day.
Yeah.
Of course, there's always exceptions to where, and this can be negotiated ahead of time when you're doing the contract. At times, the sellers normally say, after you buy and even sign, at times they want to do a leaseback. A leaseback is where they want you as the owner to lease the house back to them for a certain number of days.
Like a month? Oh, okay.
At times it's like 10 days for them to start packing and move.
Okay.
Or let's say if it's a seller who was buying a new build somewhere, right?
Yeah.
And the house is taking 8 months to build. And then they decided to put the house on the market maybe 2 months before. Then an offer comes pretty quick. And you close pretty quike. Maybe the house is not available. Instead of them moving to a hotel or anything, at times they will request for some time. But we all, I always say, the money has to be paid upfront at the closing, not like where you're gonna be picking up rent thereafter.
Oh,
It has
okay.
to be
So
paid
they lease back, they pay you.
They pay you as a buyer, yeah.
Oh, wow.
So you can actually close
and get some
and
money.
get some money because
Yeah.
you're leasing back to the buyer, to the sellers for some time. So now, instead of you being a tenant, you're actually a landlord.
Yeah, wow. I think we have covered pretty much everything. If you join us later, we have some technical difficulties. We did like half of this video. You can watch it on my wall or Marcy's wall. But something happened and the video was upside down, so we have to cut this video into 2 parts. We have pretty much talked about everything, the steps of home buying, the realtor, the financing, closing, and the pre-approval and house hunting. Pretty much we covered everything. And I would like you, Marcy, to please give us your contact, your website, your office location. If anybody wanted to look for you, what can they get for you? Can get you, like your phone number, website, and anything of that sort.
Okay. My website is www.big5homes. 5 is number 5 homes. www.big5homes.com. That's my personal website. And of course, I work under Keller Williams, Dallas location. And my phone number is 214-723-2260. So in case you have any questions or concerns, please contact me, or you can, inbox me on Facebook as well.
Yeah.
And I do have an app that I can send to those people who are going to inbox me. That way, at least you can be able to have access to the MLS properties. You can search them yourself. It has pretty good stuff on there that you can do yourself without, involving a realtor. So again,
it's big. It's 5 in number, and I think Gladys Qatar. Thank you so much for.
Getao, correct that. It's big number 5, 2260.
Yeah.
214-723-2260.
Yeah, and again is www.big5 as in number 5 homes.com.
Yes.
Marcy Wandia, Keller Williams, and number again is 214-723-2260. We're gonna read some of the comments we can try to answer some of the questions for you, and then we're gonna close this broadcast.
And while we were doing that, I was gonna say too, on my website, if let's say you go to my website, I do have blogs on there. Sorry. I have blogs on there. You can read a little bit more, the steps of buying a home, of selling a home, financing situations and stuff like that. So
hygiene, yeah.
So we can look at if there's any questions.
Yeah, we're gonna look just on the specific questions, because there might be some. Ali, by the way, what is the implication of buying a house before you marry? What is the implication of ownership? Implication on ownership if you had acquired an individual loan? Does ownership automatically become joint? What happens in
what happens in the?
Did he finish that?
I don't think he finished.
He didn't finish that, but
Okay, but let me answer the first question there that you asked about if you buy a home when you're unmarried and then you get married. Now, anything that you acquire alone as a single person, it remains your own property.
It's yours.
Yes, it is yours. So anything that you acquire jointly with your married spouse, then it is a community property. You own 50-50. I hope I answered your question.
Yeah, and again, like I want to say, like in Texas, if you go for Texas, actually, when you buy a home, Texas is a community property state. So anything you buy, even if your wife is not on the loan, she has to be on the title.
Yes,
because you married.
That is correct.
Yeah, so that you might want to look at, especially those people who,
Yes.
Yeah.
But for him, he's asking before you get married.
Before you get married.
Yes, if you buy when you're single, it's going to remain your own property even after you get married. Ali, thank you very much for that question.
Okay, can life insurance, this question from Bonnie Grace, can life insurance with cash value also count towards loan approval?
Life insurance with cash value, no, it will not count. Because when they're looking at reserves, I tend to think, Bonnie, that's what you're asking, whether it's going to count as reserves, correct? So whenever they're looking at reserves, they're looking at something that can be switched into cash pretty quick. And life insurance, I do believe with life insurance, it can take some time to really become cash for the cash value. Yeah. So no, they will not look at that.
Alrighty, and looking here, Gitao Munga is say, though FHA program is universal and it wouldn't matter who finance you as long as your credit is okay. Yeah, it's a government,
Yes, it's a government-backed program.
Program, yeah.
So it really doesn't matter.
Yeah.
Provided you go with
whoever,
a good bank and a loan officer who knows what they're doing.
Okay. And I think she has a question here, but I'm trying to say the rest of the question from Nyams Minor, because I can see here he has not credit at all, and we are going to buy a house together. He think it'll be better if I do it before we legally. Some of these are like
Nyams. Okay, I think she had asked another question there.
Yeah, we're trying to look the other question like she asked. Yeah, you can read it.
Will it hurt to apply for a mortgage with a partner with no credit, while the other one has a score of over 700? This is a loan officer kind of a question. However, with the experience, and the little knowledge that I have on this, is that if you're two partners, they normally look at the lower credit score, okay? And if they pull the 3, the person with the lower credit score, that's what they go by. So if somebody has no credit, but I'm wondering why they wouldn't have a credit score.
Everybody have a credit score. It starts from 3 something, right?
Unless they
credit
do
history.
not have any history.
It's history she's talking about, probably because.
So does that mean, Nyams, does that mean your partner has never had any credit cards and never had anything being paid on credit?
Yeah,
I tend to think that's the only reason really that I would think somebody wouldn't have a credit.
Yeah.
Yeah. But anytime, even if you've ever opened a Best Buy credit card or one car loan or something, at least there should be some form of history and a credit score.
Yeah.
Yeah, but looking at that question, if let's say one person has credit in the 600s and the other person has 740s, then they normally go with the lower person.
Oh, okay.
Yeah, for the most part, they won't look at the higher. They will look at the lower.
At the lower person.
But like she said, if they are not married and she wanna go by herself, you can you can as well qualify by yourself if your credit is good.
Yeah.
I would go that route.
Okay, we trying to read some of the comments here. Lorraine Dana, where are these programs in US, especially New York? And what is the process for somebody with low credit scores? Sorry if you have spoken about it earlier. I just tuned in.
Okay. What are these programs in the US, especially in New York? I would say one of the areas to really look, and you're talking about with low credit score. Okay. Lorraine, thank you very much for that question. One of the things that I can tell you about a low credit score, even if you get approved, your interest rate is going to be much higher than, somebody with okay credit. And okay credit, I mean from 600 and above. So if your credit is lower than the 600, or if you know somebody who has lower than that, normally I say, why don't you just take a few months and fix it? At times, it doesn't even take more than 6 months. It could be anywhere between 2 to 6 months. And those 2 to 6 months that you wait to fix your credit, to do little stuff here and there to fix it, honestly, it's going to save you a whole lot of money in the future. Because if you think about it, if you got approved and got 6% interest, while right now the interest rates are between 3.5 and 4, that's going to be huge. It's several $100s per month
a lot of money
that you're paying that you really shouldn't be paying.
Exactly.
Yeah. So I would say, I mean, it's possible to qualify with low credit score with putting a good chunk of money down, but honestly, I would rather, in the long run, you're going to.
And there's a Credit Karma. If you can sign up to the Credit Karma, it's really good. It's free of charge. All you need is just to sign up, and it actually give you the scores, your scores, and it give you some of the ways you can be able to improve your credit. It's free. I don't think they do anything other than selling your information or advertisement.
They will advertise for you on there.
Yeah. So
and the other one, the government one, is annualcreditscore.com that you can pull once a year. So that one you can pull once a year. But like he says, Credit Karma is as well.
It's good. And there's some others there. I can't remember them. The names. We have this guy Stephen Mute. Optiven Limited is the best company to invest with. I think he's here visiting from Kenya, because I think the Optiven, they were here for the East African Chamber of Commerce or something. I don't see anything else here other than just let's see whether you have any questions here towards the end. All right, I don't see anything else here like you need to address here. So
why do they go with the lower credit score? Zach is asking. Okay. Now, some banks will actually approve you with lower credit score. Number one, they are going to ask you for a little bit larger down payment than usual, right? And at the same time, they are going to give you a higher interest rate. So the banks are making money out of you, really, because if they look at you and they see that you have stability of income, it's only that some time back you messed up, they are still going to give you a chance, but they're actually making money out of you. So
and I think she's talking about the couple. If me and my wife, she has like 6 credits and 700, they're gonna go with 600 for my wife because they're gonna look at somebody who is a higher risk with a lower credit score, not looking for somebody who has a better score.
The underwriters are going to look for somebody who,
and
go with that and give you rates and underwrite you based on that lower
lower person. 600. I think that's what he's asking.
Sorry, Zach. I see.
Alrighty. So I think that's pretty much it. So watch out, guy. This weekend I'm gonna bring one of our celebrities here, and I see she have joining Dr. Pamela Mogaka. I'm gonna be with her one-on-one this weekend. You cannot miss this one because we're gonna hear about she's the president and the founder of Dear Awards. We're gonna hear her inspiring journey and why she formed these Dear Awards. Thank you guys for joining in, and I hope you benefit from this broadcast tonight. Thank you guys, and I hope to see you on Saturday. I'm gonna bring Dr. Pamela Mogaka. So have a good night. Any closing thoughts, Mercy?
Any questions that you guys have, please reach out to me. You can inbox me, you can give me a call, you can text me. I will be here to answer your questions and to guide you into the home buying process. Of course, I'm a realtor in the state of Texas only. I may be able to answer questions from other states, but I'm not licensed in those areas. So I would still refer you to a realtor in that area. If you're out of Texas. Thank you very much, guys, and have a very good night.
I hope you benefit. Although we have some technical difficulties, we had to cut this video into 2 times, but hey, you still get the information even on this video. So alrighty, so thank you guys joining it. Keep it here, and thank you for watching Prudentials. Good night. Love you guys. Bye.
Love you.
Mwah.